as cool as AI is, it is a massively centralizing force. The big are going to get bigger on the AI side. But I want AI to be more democratized. I want AI to be more decentralized.
Come back to Total Value Unlocked, the podcast where we explore the technology and ideas shaping the future of digital assets and frontier tech industry. In this brand new season, we'll be focusing on market infrastructure, the foundational tools, systems, and platforms that powering the institutional digital asset market from behind the scenes. And in our first episode of this new season, we have our guest today, who is somebody at the center of it all, Raghu Yarlagadda, CEO and founder of FalconX. Since 2018, FalconX has grown into one of the largest institution prime brokerage in digital asset and beyond, powering trillions in trading volumes, supporting major ETF flows, and helping shape what modern market infrastructures look like today. Welcome to our podcast, Raghu.
Thanks so much for having me, Matt. I've known you for a very long time, and I'm really excited you're doing this. So thank you again.
Of course. Great to see you again, Raghu. For those who may not familiar with FalconX, Raghu, I will start by having you tell our audience a little bit about your own journey starting FalconX and its role in today's digital asset industry.
Sure. FalconX is, as you said, one of the largest digital asset brokerage. And by that, what I mean is, Matt, we do three things. We are a one-stop shop for clients, primarily focused on three things. The first thing is trading, whether it's on the principal side or an agency side, spot or derivatives globally. We do have trading capabilities that serve most institutions that are out there. The second thing is short-term financing. And the third thing is custody operations. So as a digital asset brokerage, to give you a little bit of sense of scale, we've done about $1 trillion of volume or more over the last 1.5 years. Now, what's interesting within that volume is a lot of the volume in crypto right now is moving from spot to derivatives. Right. So we've seen a sizable migration and amazing growth on the derivatives side. So we're about 12 to 15% of global options volume, for example. So that's what we do as a company. We serve all the way from hedge funds, prop shops, venture capitalists, and we also serve a lot of retail aggregators, essentially some of the biggest names in retail that are powering crypto. We have the wholesaler behind, including for some of the ETF providers that are out there.
Yeah. And, obviously I want to dive into this a bit more later on, as, that, HiveMind, actually, we use FalconX ourselves, and we had a great experience, interacting with you and your team. And I also know that recently you made some acquisitions, also expanded into FX space. So I'd love to unpacking all of this. It sounds absolutely fascinating. So before we do that, Raghu, obviously it's been a very volatile start of the year in the markets, right? Both in the broader macro environment as well as in our crypto industry. So I think despite the price pullback sharply in Q1, we do continue to witness a consistent institutional interest coming into digital asset space. For example, BlackRock ETF today saw, these days is already having 3 billion net inflow in the first 3 months of 2025. At the same time, we also saw a lot of very good news, constructive news on clarities from the regulation side and an uptick in M&A activity. So I guess from your vantage point, you just gave the audience a very good overview what FalconX does and where your main focus of a business come from. Where do you stand in the current crypto market cycle? I mean, our audience is going to be very interested to hear your sort of perspective. Like, how are institutional investors responding to this market? Are they backing away? Are they doubling down? Are they still testing the water?
It truly is a roller coaster since the start of the year, as you said, Matt. In the first part of the year, I think you've seen a strong positive momentum for the space because it is the most pro-crypto administration that we've ever seen for crypto. Right. And that made a huge difference, right? For an industry that was missing regulatory clarity, that was missing the support, having such a pro-crypto administration, truly changed the tone and the sentiment for everyone viewing crypto. Now, crypto is no longer a fringe asset class. I think Absolutely. It's more than mainstream.
Table stakes.
Exactly. So that was the first part of the year. Now, as we progress through the year, we've seen tremendous amount of volatility, and I want to basically tease this out a little bit. Almost all the volatility that we've seen is resulting from the macro backdrop of what's happening with the tariffs and the geopolitical tensions. So crypto has been largely correlated with what's happening in macro, and we don't see any structural gaps within crypto itself. This is moving in line with the macro. But what's interesting over the last 2 to 4 weeks is the performance of Bitcoin.
Mhm.
Despite the macro moving, despite the risk on assets moving, Bitcoin has been relatively stable and relatively range bound. And that's very interesting. And we know that there's some very interesting TVAPs going in the market.
Mhm.
There is an impact of those TVAPs in terms of stabilizing the Bitcoin price. But we think that's only 20-30% of the story. 70% of the story is the conviction that institutions are building towards Bitcoin as a hedge against the macroeconomic policies.
Right.
So the names that we are interacting with who are coming into Bitcoin, you mentioned, you quoted the public stat about ETFs, but a lot of institutions also come directly to brokers because they do want a 24/7 vehicle to interact with Bitcoin. So when I see these names, when I engage with some of the biggest names in traditional finance, the conviction around Bitcoin excites me quite a bit.
And I think this is a very good segue, I guess, to my next question is, Raghu, this is not the first cycle you saw. This is not the first cycle FalconX saw. How does this cycle feels different structurally, from the past ones like 2021 or 2018? What are the signs of the industry maturations that you're witnessing today, like that's different from previously?
It's a very interesting question, Matt. I think first and foremost, the maturity of our industry is definitely on a very different plane, and I'll actually tease that out. The launch of ETFs is a very profound moment for crypto.
Hmm.
Bitcoin ETF launching at the start of 2024 is a huge moment because as a technologist, I've worked on several game-changing technologies, and what I realized through the process is technology alone is not going to change the world. It is the intersection of a profound technology with uh, political buy-in. These two forces need to intersect along with regulatory clarity for the technology to truly blossom. For Bitcoin, I think this is a decade or plus technology. I think we've seen tremendous progress on Bitcoin itself, but the regulatory clarity and the political buy-in were two things that are missing. What
Right.
ETF launch demonstrated is now we have the regulatory clarity specifically around Bitcoin and Ethereum, right? And more assets to follow. And what the election cycle proved is the political buy-in is there across both
Mhm.
sides of the aisle. So that is a very different construct compared to the 2018 or 2021, any of these previous cycles that we've seen. So the launch of ETFs, number
Mhm.
one. Number two, the number of institutions, the number of corporations having Bitcoin exposure in their treasuries is also fascinating. Some of which are public. But if I look at my pipeline over the last 2 3 months, it's been remarkable. We are seeing more than three plus very big names thinking or considering potentially digital assets on their corporate treasury.
Sure.
So that's the second thing, which is very different. The third thing is the emerging regulatory clarity. I think 6 to 9 months we predict a much better, clearer regulatory framework, whether it's on stablecoins or market infrastructure. That's going to be extremely powerful too. So
Sure.
these three ingredients mark it as a very different cycle compared to the last 2 3 cycles.
Absolutely. And I think that may be some of the backdrop for certain of the, acquisitions, expansion, and growth FalconX is doing. For example, people know that you recently acquired Arbalos to expand your footprint in the derivative market. And you also talked about earlier how big derivative market is becoming and where the focus FalconX has been putting into it. Take us through your thinking of that particular acquisition a little bit.
Yeah, I see two megatrends intersecting, Matt. I mean, the first megatrend is having come from the world of technology. This reminds me of the 2002 to 2010 era of the internet, where there's been a purge. of business models, the companies that were not structured well. And post the dot com bubble, the reality of use cases started kicking in, and the regulatory clarity also started emerging in, which is the net neutrality and privacy laws in the internet started kicking in. As a result, cost of doing business increased.
Hmm.
And because of that cost of doing business increasing, companies started consolidating massively, whether it's the YouTube or the double click acquisitions within Google, and you can Cisco acquiring a whole bunch of companies. It like that cycle went on for 5 7 years. That gave birth to almost like the modern era of companies that we've seen.
Sure.
So I think a very similar thing is happening in crypto, which is the first mega trend, which is we're entering an era of the next 2 to 5 years being regulated growth, largely
Mhm.
powered by US leading the way to start with. And
Yep.
then it's going to pick up massively in Asia and Europe as well. So as we kick off the regulated growth chapter for crypto, what happens is the cost of doing business and the economy it will increase. The economies of scale are going to be exceptionally important to serve customers really well.
Right.
Like, once you have the deepest liquidity, for example, I'm able to give really good pricing. And to
Hmm.
provide the deepest liquidity, I need a sizable balance sheet. I need very deep integration and reliable partnership with some of the biggest exchanges, market makers, miners that are out there. So that infrastructure, anyone who has that economies of scale, it's very difficult to compete. So as a result, because of economies of scale and the cost of doing business, more and more players are consolidating. So
Hmm.
the first mega trend is I first mentioned this in Bloomberg, like about 6 to 9 months back. At that point, it was a little bit of a contrarian bet. Why will the world consolidate? But Q4 of 2024 and Q1 of 2025, we've seen record number of M&A deals, 50
Sure.
plus deals each of these quarter. So I think the first one is the wave of consolidation. The second one is like, what does it mean for FalconX? How do we think about consolidation? I think about consolidation as not acquiring 10 companies, but I'm a big fan of acquiring as a serial entrepreneur, acquiring fewer companies that deepen my customer understanding and deepen my value proposition to the customer. So that's where the second megatrend came in, which is the massive growth in derivatives. Derivatives is growing tremendously. In traditional
Hmm.
markets, derivatives are usually 3 to 5 times the spot market. In crypto, it's about 2 times and growing very fast.
Sure.
So we've been working with our bellows for a while, and we know that they're one of the best desks in the world. So bringing our bellows in-house gives them the economies of scale of the regulatory platform, the balance sheet, the left of liquidity from FalconX side, their customer understanding and their innovation in terms of how to underwrite derivatives is creating a lot of value for institutions.
Yeah, I mean, congratulations again. Obviously, I also know Josh Lin for a long time. I really think this is like a win-win situation. Now, having Arblos as part of, FalconX family, I think gonna massively increase you guys, being a powerhouse of derivative. And you're right, that consolidation point, I can't agree more because from HiveMind's vantage point, that also happens on digital assets management side too, right? I mean,
Mhm.
throughout the last 4 years, we'll see a lot of, big mega funds that are either decided to fold, declined, or do things they probably shouldn't do and go out of the business. But the other who are resilient, consistent, put up a big fight and continue to grow. So I can't agree with you more. I think, generally speaking, if you look at the cycle where we are in economy, when interest rate is high, when everybody coming out from a very, I guess, a bubble time in terms of venture funding from 3 4 years ago, and this year, next year is where literally a lot of the startups gonna lose all their runways because they couldn't be able to continue to raise at that type of speed of valuation the last 18 24 months, you're going to see a lot of consolidation happening. I think that is particularly true in our space, because
Mhm.
the cycle getting even more exaggerated. So if you be able to, in this period of time, next 20, 4 months, 18 months, like you said, figure out exactly where is your biggest part of the growth you want to focus on. For you, derivatives
Mhm.
is one of them, and then trying to use the tool between building and investing and acquiring, because for you as a successful serial entrepreneur, it's kind of doing the same thing at different scale. That's a very, very smart way to sort of hyper fuel your growth.
Yeah. And Matt, the one thing that you mentioned, like 5 years back at this point, that I remember very fondly, which is aligned with what you're saying, is it's not just about consolidation. And to your point, it's also about partnerships. You asked
Yes.
me 5 years back, who do you want to partner with and why? And
Hmm.
Matt, I mean, this was a question you posed 5 years back, and that is something that I think almost every week, every month. Partnering with the right people and using those partnerships as the foundation to keep adding more value into the ecosystem is how the space grows. So it's
Absolutely.
consolidation and partnerships for the reasons that you mentioned.
Yeah. And hey, look, 3, 4, 5 years later, you build amazing, powerhouse in prime broker derivative market. So all kudos to you. And on that note, Raghu, FalconX was the first crypto firm to become a registered swap dealer. I remember a few years ago talk about this. That was a very bold move, right? Especially at a time when much of the industry is still trying to resisting or at least trying to figure out what's going on. So tell us why take the path so early? Like what did you see that the others may have missed?
Yeah. Matt, I think a big reason why I came to the space is I truly believe that tokenization is one of the most powerful technologies coming out of the last decade.
Hmm.
And crypto sitting on top of blockchain slash tokenization is the first application of tokenization. And it was a remarkable application of tokenization, right? You have $2 trillion worth of market cap that's being traded 24/7, truly globally, and rapidly accessible to almost every human being on the planet with the internet. Now, stablecoins are the second application, which are trending very, very well. The reason why I mention this is I'd be very disappointed if FalconX is just a crypto company in 2 to 4 years.
Hmm.
Our goal is using crypto, using stable coins, let's create tremendous amount of value for institutions. And on the heels of that, let's build a technology stack that can be reused for traditional assets, very many assets than just crypto. I don't think the world needs equities tokenization tomorrow, but whether it's on fixed income, long tail of commodities, there is so much more power and cross-border B2B payments. There's so much more power that can be leveraged off tokenization. So that's always been the belief of FalconX since day one. And in 2018, that was a very wild statement to make. I made three statements in my very first slide to investors. Crypto will be a $1 trillion asset class. If crypto is a $1 trillion asset class, statement number two, institutions will be more than 50%. If institutions and cryptos take off, this technology is going to spill over into other asset classes.
Right.
So number one, number two panned out very well. And number
Hmm.
three, we're beginning to see it's panning out. If we believe in that thesis, this technology is going to spill over into traditional assets, I have no option but to play very well with regulators.
Right.
And that also means that my customer, in this case institutions, also appreciate playing well with regulators. So in 2022, you're right, Matt, it was a very tricky time for a crypto founder to be intersecting with any regulator because most crypto founders who went into regulators didn't come back properly.
Yeah.
So there was a lot of advice on you're preempting it, why now, and all of that. But we felt that CFTC was the right regulator, swap dealer was the right framework. As we saw the growth of derivatives.
Yeah. I think I can't agree more and resonate with me a lot. As you know, Raghu, when we started HiveMind in late 2021, we also proactively not getting ourselves regulated in the US, also proactive regulate ourselves in the UK. That's
Hmm.
the foundation for us to keep launching new funds in a regulated way because for me, the same logic, right? What's the first principle of thinking here is if the crypto never takes off, then it's not a business worth building. All
Hmm.
bets off, that's fine. But it's worth building the asset class must be huge. If the asset class must be huge, there must be institutional investors playing. If they do, they will only be interacting with the people who are the grown-ups that are regulated in the right way and early on. And that, I think, in the long run, going to pay a lot of dividend because, as you said, we go through a consolidation period. So if you haven't got that regulatory head start, it's actually pretty difficult to catch on later on.
Hmm.
Um,
One
yeah,
question for you, Matt. I'm
yeah, of
very
course.
curious. how do you see the regulatory landscape evolve from your vantage point? I've always been curious for your
Well,
perspective.
I mean, before I answer that question to you, actually, I want to ask that question because you are
Hmm.
part of this small group invited to the first ever digital asset summits at the
Hmm.
White House, a few months
Hmm.
ago. Like tell us about that experience. So you must have a lot of insights from the legislation and regulation perspective by having FalconX stay very close with DC in general. Like, what would you sort of like bring on the table? What's your biggest takeaway from that conversation, and what's your sort of current feeling about where the landscape is?
Sure. I mean, first off, it's just an incredible privilege, Matt, to be hosted at White House because the last 2 3 years for almost every founder in the space and every company has been incredibly hard.
Yes.
Now, forget who's there in that room, but the recognition of crypto being invited to the White House is a recognition for all of us. And I was incredibly proud to represent and do my part. So it was a very proud moment, and I don't take it lightly. The second thing, on a fun note, it White House is not a house; it's a museum. It was just incredible, right? Everything has
Yes.
such great, amazing history, and we were hosted extremely well. Now, to the specifics of what transpired in those rooms, during the summit, before and after, it was very interesting. First, I think there was very clear agreement across the 25 people who are in this room and the new administration that we accomplished a lot through the executive order around the strategic Bitcoin reserve and a few other things. It's very important to also what can be brought into effect with a signature can also be sometimes unwound with simply a signature, if the administration changes and all of that. So, number one, it was very important that we convert a lot of progress that we made into legislative actions.
Mhm.
So legislation around stablecoins, legislation around market infrastructure, legislation around strategic Bitcoin reserve, these three aspects are going to be the focus going forward. So how do we legislate and put them on a piece of paper in a more robust way? The second aspect of discussion is around some of the tactical needs of the industry. For example, Matt, one of those deep lurking problems that most people don't talk about in the industry is the security risk.
Mhm.
Some of the biggest exchanges are getting hacked by extremely complex security threats. And the threats that we've seen in the last 2 3 months are powered by some of which are powered by AI. These are the most complex security attacks that the world has ever seen.
Absolutely. It's getting scary. Very
It
scary.
is scary, right? I mean, on one side, you have the power of this rapid technology transformation. On the other side, the risk vector is also getting stronger. So the second major area that we discussed is how do we use the power of everyone who's in that room to collaborate better on security threats? Should we share intel? Should we, whitelist, blacklist, and should we collaborate on that? Should we actually learn from each other? I think uh, that is a very powerful thing that I'm looking forward to because that's a very clear, tangible, specific way that the industry can get better. Not just the US companies, but companies around the world can be much more secure because we collaborate better.
Yeah.
So those are the two, themes that we discussed during the summit. But between the lines, Matt, what was very interesting is we've discussed this before. Over the last 3 years, because of the cycle, the industry was largely in a zero sum game. Everyone was
Mhm.
competing with everyone, right? So in a zero sum game, you're not in a growth mindset. You're not thinking about how do I put one plus one and create five.
Right.
So the power of putting everyone in this room is to some extent, we all compete a little bit, not outright competitors, but we all compete with each other a little bit. But being in the same room and thinking about the industry over the next 3 to 5 years also pushed a lot of us out of that zero sum thinking and more collaborative with each other.
And I think in the last 18 months, people starting to realize um, the net sum game, not the zero sum game, is where the space really needs because the upside is so huge that sure, you'll be able to getting a little bit alpha from playing a zero sum game, but collectively, if we push in our direction towards getting a net sum game, it's going to be 10 times better for every single individual organizations. So it's become a decision that people made by choice, right? So I think that is very interesting. Now, sort of like sharing back, you asked me earlier about my view on regulation. I would say a year ago, if we sit here, I would say US is pretty behind, right? For many reasons. That's quite frankly the reason why some, asset management businesses, hedge fund, venture shops that work in our space are moving their headquarters, their operational teams offshore. As you know, we have operation in London. We also have office in Hong Kong. So we actively engaging the regulators in other geographies, jurisdictions. And I would say up until probably a year ago, definitely having more transparent, constructive regulators in the other part of the world, which is really a big shame because US is still where a lot of the talents are, a lot of the capitals are, if not the most of them. I think, we can all comment about Trump administration's many policies, but I think at least coming to the crypto side, I really very impressed with what they achieved in the first 100 days. I think, a lot of this SEC pulling back about some of, decisions they've made with some of these projects out there really showed at least a willingness to relook at the space from scratch, right? Trying to actually providing a transparent, constructive regulatory framework. I think on the other side, Raghu, you've been in the space long enough to know, is there no bad characters in our space? No, there were bad characters, but that is the same thing for the early days of internet. When you have a transformative technology coming up, you're always going to have a lot of controversials to start with. People try to figure it out, and then the bad characters, the good characters. But you have to believe over time that as long as technology makes sense, as long as there's more builders put their hard work in, the general trend is up towards the top right. So I think that all we needed was a fair chance. I think today the US regulation has given the entrepreneurs, the people like you, a fair chance to build something amazing. And from that perspective, I really is very, very optimistic. We can comment about the price actions from today to tomorrow, but in the end, I think it's really about the legislation regulations that matters the most, right? Because the reason why you get up every day, keep building FalconX, and I get up every day, keep building HiveMind, it's not because the Bitcoin was trading 2 or 3% higher or lower than yesterday. It's to know that there is a long-term prosperity of this space in general.
That's exactly right, Matt. I mean, for me, like when I look at all the bets that you could be taking over the next 5, 10 years, for me, there's no question that tokenization in crypto is a sizable bet. And that bet getting powered by the regulatory clarity that you were talking about is the last unlock that we are waiting. From now on, I think it's meritocracy, it's creating value for the customers, and it's building. And we know how to do that.
Yeah.
So excited.
And then talking about that, let's talk about the operation infrastructure. You just mentioned about tokenizing many other assets beyond cryptocurrencies is the vision where FalconX eventually would like to achieve. You've been in previous interviews mentioned that FalconX has moved trillions of dollars, and you just mentioned, today with our audience too, with like 25 people, something like that in the back office, like that's quite staggering if you compare how much resources needed in the TradFi world, in the bank, right? Which I was part of one before. What enabled that level of efficiency? Can you let our audience, get a bit more insight about your operations?
Yeah.
Like what aspect of your infrastructure actually made easier by blockchain technologies and in general?
Sure. I'm so glad that you're bringing attention and specificity to tokenization and how exactly is it applied. First, to define what tokenization is, as the power of blockchain enabled us to move $1 trillion plus with 25 people in the back office. And when I compare those stats with large traditional banks, what I hear is they need usually 10 times more people, 250 people or so, to move $1 trillion with the complexity that I'm talking about, post-trade settlements and all that kind of complexity. Now, to your question of how, right? I mean, what within tokenization made this possible? Matt, I think the three attributes of tokenization which are extremely powerful. Number one, immutable ledger. Number two, that's operating 24/7 and doesn't have downtime. And number three, a global asset and infrastructure. This is not just like the internet. This is not just one country or one region. It is available globally. It operates 24/7 and it's immutable. What that means is if Hivemind and FalconX, if you're doing trades and if you're reconciling at the end of the day, a tremendous amount of complexity exists in your database reconciling with my database.
Mhm.
Now, both of us coming on a joint shared ledger, which is immutable, removes all this noise about when we are reconciling trades at the end of the year, at the end of the month. It's like, oh, my database says so versus your database says so. That's completely gone. It is a shared record that is immutable. Number two, it operates 24/7. And what that means is in a regime where news cycles are changing every single minute all the way through the weekends, and if you want to trade over the weekend, we don't want to wait till Monday or first thing Monday morning to settle these 100 trades that we've done over the weekend, which are prone to errors if you wait on settling these trades for a longer duration. So we can settle as soon as the trade is complete. That way our record keeping is much more precise and immaculate. The third aspect of it, is this global nature. We've seen institutions that have globally diverse operations like yours, right? I mean, Hong Kong, UK, and many other places, and you'll be growing to many other locations. All these locations can trade on one single piece of infrastructure, again, the blockchain technology. So these three attributes of blockchain, uh, which we all package it as tokenization, massively improves the efficiency in the back office. It's a 10x efficiency boost. It's not a 10% efficiency boost.
Absolutely. And we're seeing major firms tokenize US dollar treasuries, stablecoin like USDC, PYUSD. They're growing rapidly, right? So I guess I can guess your answer based on what you said, but Raghu, do you think that tokenized dollar will eventually become the dominant or the largest, the only settlement layer, not beyond crypto market, but in the traditional market too?
Yeah. My forecast, Matt, is the tokenized dollar, or aka stable coins, will start getting more and more traction in the developing economies, in economies where US dollar is not as present at this point.
Right.
Because that's where the need is the most. Because for the developed world, you have the Swift, you have a bunch of different topologies. I'm not saying those topologies are perfect, but there are systems and services.
Yeah.
But for the developing markets, which are starting with sometimes with a very different set of assumptions, like they want to move money fast, they want transparency, and they do not want to miss on yield. In these economies and in these systems, I think tokenized dollars, aka stable coins, will actually get product market fit faster. And that's what we're seeing, right? When I started the company in 2018, stable coins didn't exist, but existed in a very small way, less than $1-2 billion of market cap. Now they're $200 billion of market cap. And it's incredible. I know companies, very large companies in Southeast Asia, that are doing trade financing and trade settlements in stable coins with their LATAM counterparts, and they settle 5 times a day versus settling once every 2 days, which is the older paradigm.
Cheaper too.
It's much cheaper, it's faster, it's immutable, all of that good attributes. There's so much more trust in that system. So I think that's where we'll see the first wave of adoption. And then the second wave of adoption will slowly creep into the developed world as well. Because hedge funds like yours, very prominent funds like yours, for the first time, they're able to actually, I'll give you an example. You're able to short $100 million of Bitcoin or Ethereum on a Saturday morning. And shorting requires you need to find, locate, and execute the trade. And you're also able to settle that $100 million of short in a matter of 1 hour globally across your offices.
Mm-hmm.
This is not possible in traditional finance, even today. So I think that is where the developed economies also will start embracing tokenization and stable coins, because you truly need 24/7 finance. It's no longer an option not to be involved with 24/7 finance. So I think that's where the second phase of adoption for stablecoins will kick in.
When that second wave does come in, is there any underexplored use cases in your mind or assets that should have been tokenized but has not, that you think are particularly well suited for this and actually have picked up a tremendous 10 times growth?
Yeah. So the first areas where there is a clear product market fit is like cross-border payments. Both on the retail side and on the institutional side, there is a sizable product market fit in terms of number of transactions, the volumes of transactions. A16Z report, calls this out really well. It's just staggering to see the numbers there. The second use case that we're seeing for tokenization is settlements and back office efficiency, right? Which is what you and I have been talking. There we're seeing a lot of traction, and most of that traction is centered around crypto and crypto use cases. But slowly we're beginning to see things like Biddle from BlackRock, whether it's on fixed income side or on the forex side or tail end of commodities side, the back office efficiencies are the next big place where this will explode. And those are the assets that I'm very particular about, fixed income, forex, and tail end of commodities. We're seeing a lot of interest from that side typically, and we launched a forex desk that's doing that recently hit $1 billion of trade volume in a very short period of time. And the reason why people are coming to the forex desk is not just because of the forex pricing efficiencies, but it's I don't want to sit on 2 days and wait in the banking system for this rapid settlement. So those are the assets I think where we'll see the takeoff.
Okay, so switching topic from tokenization, one other trend away from that we're seeing in our space is AI. You cannot get away with a podcast today without talking about some aspects of AI, I guess. So let's talk about it. You recently launched Ask Focal, right? A LLM orchestration platform that already have 80 clients and 10 billion AUM supported. What's the core idea behind Ask Focal, and what problem were you trying to solve?
I have a background in applied machine learning. And Matt, the first time I've heard about generative AI, I felt it was speculation, right? Humans love anything that parrots human beings. But the way I understand the world as a builder is by building things. So as generative AI came in, and some of my friends at OpenAI and Google are getting very excited, I started building along with our founding engineer, whose name is Tabby. We've seen incredible outcomes. Incredible outcomes in that, to be more specific about it, as a fund, as a finance manager, you're bombarded with tremendous amount of news, tremendous amount of information every second. Your portfolios and managing and doing scenario analysis on portfolio is getting more and more complex because the amount of data feeds are also increasing exponentially. Now Twitter is a data feed. Retail sentiment can be measured in so many different ways. Number three, you pair all of this like the 24/7 news cycle with rapidly evolving portfolios and the scenario analysis with a rapidly changing world. Now, to comprehend all of this, there is no technology that's out there other than generative AI to actually help a finance manager, a portfolio manager, to make decisions very confidently. AKA, what I'm mentioning is, I think in 2-3 years, every major portfolio manager in the world will have a LLM orchestration platform like Focal behind them to assess all the news, all the information they have available, all the way from S1s to Twitter sentiment, rapidly every second reevaluate their portfolio whether the construction is in the right format, and number three, streamline back office operations in terms of audits, reconciling, and settlements. So that's what we believe AI will do to finance. And this is not just a crypto specific paradigm. So Focal is an LLM orchestration platform that picks the best LLM for you for the best query and deeply integrates into your enterprise data, which is under your control in an agentic way.
And beyond fast research and better insight, where do you see AI and blockchain at the higher level have some meaningful intersections?
Yeah, it's a very good question. Fundamentally, as cool as AI is, it is a massively centralizing force, Matt. The big are going to get bigger on the AI side. But what we've seen over the last 1 years, and I personally, as a father of two daughters, I want AI to be more democratized. I want AI to be more decentralized. Open source AI is a very important component of AI built out as a humanity.
Absolutely, I agree. Can't
Now,
agree more.
if open source AI, because if something were to go wrong, I mean, an open source platform is much more dissectable than closed source systems. So I believe in open source also being a component along with the centralized AI systems, because centralized AI systems are equally or more powerful. But all I'm saying is open source has a role to play. Now, the problem with open source is incentives were never aligned. FalconX was built on a lot of open source software, but we haven't contributed a dollar to all these great engineers who actually contributed to those open source libraries.
Right.
So there is a massive incentive mismatch, right? We all use open source, but there is no way to contribute back. And I think that is where tokenization and crypto can potentially help. If you can pair the power of open source software build out and align the incentives to the developers and the people who are using it through the power of tokenization and crypto, open source itself will thrive, will open a completely different chapter. And that's what's needed in crypto. And that's what's needed in AI as well.
There's a lot to look forward to, and I can't agree more regarding like I think open source is so important, but you have to find a smart ways that to incentivize people because at some point open source will get into that elephant in the room is how to keep incentivize people to do better work. And I totally agree. Blockchain, if we find a smart way, applying the learning in the space, and then find a smart way to solve that social fabric, that obviously
Mhm.
I think is going to be a tremendous contribution to the development of AI too. Talking about looking forward, I mean, you founded FalconX in 2018, Raghu. Since then, we've seen bull markets, we've seen bear markets, and we've seen a lot of noise in between. So a
Mhm.
lot of firms didn't make it, right? Reflecting the last 6 years, what do you think enabled FalconX not just to survive, but also thrive and become a leader in the space?
It's a very interesting question. I would think about two or three elements that generally makes companies much more sustainable, right, in a rapidly evolving market, which is crypto. The first and foremost, I think the employee base, Matt. Working with people who are long-term thinkers, who have the ability to execute really well short-term and put out these tactical fairs on a day-to-day basis, and still draw inspiration from building a generational firm to mid to long term. That mindset, that ownership and the entrepreneurial mindset is extremely important. And your job and my job, this is arguably one of the toughest things to do, is to retain people like that.
Right.
I think it starts like, that is almost like 70, 80%. Finding those people who are inspiring, finding those people who are excited about the future that we're building. That drives like, people like us. So I think that's number one. Number two, I think there are a lot of places where there is an easy way out of a problem, and there is a long-term sustainable way of like solving a problem. And we discussed this in the context of getting the first swap dealer license and still the only swap dealer license in the US. So those decisions are very difficult because you need to invest a tremendous amount of time, dollars, and resources in the spirit of investing towards mid to long term while sacrificing the local maximum of the short term.
Sure.
The second thing is the longer term framework. The third thing is, and this is something that I touched upon as well, who you partner with, who you take advice from, and who you're friends with defines you as a company in frontier technologies like crypto. Like, having that network of investors, partners, and friends who keep it real, who give you great advice during difficult times, and who are supportive to you more broadly. I think that we are standing on the shoulders of so many people, man. Like,
Absolutely.
the advice that you gave 5 years back is something that I remember, as I told you, right? I mean, who you partner with is very important.
Yeah, the tribe, find your own tribe. Your board member, your shareholder, your customer, your partners, your employees, they're all part of making this vision real, right?
Yeah.
So we end every episode, Raghu, of each season with the same question. You're the first one of this new season's first episode, so I'm going to start with you. What do you think is the most important piece of the market infrastructure that is still missing today? And that, what do you think it takes us to get there?
Yeah. One of the most important market infrastructure elements that's still not solved is risk isolation. Uh, Specifically, what I mean is they're amazing exchanges that we work with on a daily basis. They're amazing brokerages that you guys work with on a daily basis. Isolating risk across these layers is very important. If you're trading on an exchange or if you're trading on a broker, the ability to basically use tri-party solutions to post collateral and still trade without putting all the capital at risk at every single point, I think it's a very important construct that we need to solve for the industry.
Amazing. With that, Raghu, thank you very much for joining our podcast today. I think our audience enjoyed tremendously hearing your view and look forward to seeing you very soon.
Thanks so much, Matt. It was a lot of fun. I really appreciate the chance.